Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, June 11th, just after the close. Quiet ebb and flow to the equity markets this week. We've seen money shift from sector to sector, but not come out of the markets. And that's reflected in the indexes trading at or near all-time highs. So good, broad participation. In terms of where we're seeing that participation, going back to our thoughts 2 and 3 weeks ago, we've started to see a subtle shift back to growth from the cyclically strong, let's call them value areas, such as basic materials, industrials. As a matter of fact, if we bring up this chart and take a peek, you can see that technology from 2017 through 2020 was the strongest sector in terms of relative strength. Strength versus strength amongst the security. So relative strength compares strength and weakness amongst two securities or sectors. So you had wanted to be in technology. Those are quarterly numbers we're looking at. Look at the string from 2017 on through 12/31/20. Technology, technology, technology. Then some weakening. In terms of my history with looking at relative strength, what I have found is when you have a trend that is bulletproof, that strong as we've seen the last 4 or 5 years, the pullback can be bought in relative strength. So it's now the 5th or 6th strongest sector. You're starting to see momentum come back into that sector. Very interesting. Some sectors don't trend well. Some sectors are very choppy from a relative strength standpoint. Technology has shown outsized gains and performance. We'll look in terms of our U.S. equity portfolio if we need to shift capital back in there. We saw within Tactical Trend a wonderful week out of the software names, out of the Qs. Look at Adobe, up through all-time highs today. Good bit in Microsoft, starting to see capital return to growth. I mention that because it goes hand in hand with something the bond market's telling us. All we do in terms of headline and television media from a day-to-day standpoint is hear inflation, 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 runaway inflation. Bond market's not buying it. We're at a 146 on the 10-year, down from 175 5 or 6 weeks ago. Bond market's not buying this inflation story. Maybe the inflation and runaway, excellent growth is going to start to taper. We discussed this last week. As we start to taper, we are seeing that money on the equity side return to growth. On the bond side, we're seeing a bid in bonds. At a 146, down 30 basis points over the last 6 weeks, that's not something you would equate with runaway inflation. So when we talk about inflation, when we read about inflation, make sure we're looking at the other side of the story. If I asked you where Italy's 10-year bond was, could you tell me? Italy's 10-year bond's at 75 basis points. Quasi-junk credit-wise. You want to buy U.S. 10-year at 145, 150, 155, or Italy? You want to buy Spain at 35 basis points or U.S.? I only mention this because one of the most crippling factors a trader or an investor can have happen to them is to have a strong locked-in opinion that's strongly held, where you're not investigating the other side of your opinion or trade. So if you are an inflation hawk, make sure you're listening to the bond market. There's wisdom in the markets. Does that mean I think we're not seeing higher rates? No. I'll let the bond market speak to me. We'll let the bond market speak to our bond traders. There's wisdom in the markets. Always has been. That gets back to a little bit of that relative strength that we went over that on the chart earlier. Those markets were telling you where to position capital. Sometimes we have to listen and always investigate the other side of our trades. We do that an awful lot here. And when you stop doing that, that's when the crypt keeper, that's when the man with the box starts to create your box to carry you out. One last thing. Some of the same people that got destroyed shorting meme stocks in January got destroyed again this month. Think about the ego in that, to return to a trade where you had your guts ripped out and you've done it again. Strong opinions, strongly held, is a very difficult way to trade. Have a great weekend. We'll see what next week brings. And I'm sure we'll have some words from the Moose, who's on the road this week.